The most recent gauges of inflation, both producer and consumer, showed prices slowed slightly. Price increases slowed slightly in April. The consumer price index falling to 4.9%, a tenth of a percent cooler than analysts expected. One Fed official, though, not satisfied with that report, saying there may be a need for more rate hikes if inflation does not come down further. For more on this, we go to Yahoo Finance's Jennifer Schonberger for those remarks. Hi, Jen. Good morning.
Good Friday morning to you, Julie. That's right. Fed Governor Michelle Bowman saying this morning that if inflation remains high and the job market remains strong, more interest rate hikes would be needed. Speaking earlier this morning at a conference in Frankfurt, Germany, Bowman said, quote, should inflation remain high and the labor market remain tight, additional monetary policy tightening will likely be appropriate. She went on to say right now inflation remains much too high and measures of core inflation have remained persistently elevated with declining unemployment and ongoing wage growth. Bowman says the latest read on consumer prices via the Consumer Price Index, as well as the latest employment report for April, haven't convinced her that inflation is dropping. While the headline read on CPI cooled to 4.9%, the so-called core reading, which the Fed favors because it excludes the volatile food and energy prices, remains sticky at 5.5%, about in line with the core level on inflation so far this year. Though Bowman says the economic outlook is uncertain and monetary policy is not on a preset course in light of the recent bank failures, underscoring that credit conditions continue to tighten. Bowman also weighed in on the recent bank failures, saying some banks have followed a ask for forgiveness, not permission mentality, and that banks must prioritize a strong risk management culture. She said if banks can't take supervisors' directions to correct problems informally, then regulators would need to impose formal measures with definitive timelines and consequences for banks that fail to correct issues in a timely way. Bowman says she's also extremely concerned about calls for scrapping tailoring capital requirements based on banks' sizes, something that Fed Vice Chair of Supervision Michael Barr has indicated needs to be revisited. She warned imposing higher capital requirements could increase funding costs for banks, saying, quote, if it ain't broke, don't fix it. Julie?
All right, I'll take it from here. Thanks so much, Yahoo Finance's own Jennifer Schonberger. Appreciate it.